Investors and traders, welcome to the channel Market Chart Pattern. In this special report segment, today we are going to take a look at the stock Tesla. So this video is going to be only about Tesla. We are going to look at the Tesla stock from a technical analysis perspective in more in-depth detail. And in this special report, I will just take the time to discuss in more detail about the patterns that we have been looking at and the levels that we have been watching based on these pattern formations and the pattern recognition methodology that we follow at this channel. We'll take a look at the daily chart, start from there, then we'll zoom out and have a look at the weekly chart, and then finally at the monthly chart to take a look at the bigger picture for the stock. So this is a video being recorded at the weekend. Today is the 29th of April 2023. This is the end of the week, trading week. So it's also a weekend review, and also it is an end of month review for the stock of Tesla, and a special report in which we're going to discuss in more detail this stock. So guys, if you are new to our channel and you have subscribed to the channel recently, welcome to the channel. Here we look at stocks and indices and currencies, commodities from a technical analysis perspective. Those of you who like to watch the video but haven't subscribed yet and watching them from sidelines, what are you guys waiting for? Please do subscribe to the channel if you like the videos. So guys, this video is for educational purposes only, and it is not a financial advice. Now, what we are looking at is the daily chart of the Tesla stock. And what you see highlighted in this yellow shaded region is a pattern formation that we have been following for quite some time actually. And in fact, this $210 per share level, it was called in advance that it could most likely prove to be a pretty strong resistance level, and this is what we have seen going back 15th of February. So for a good number of months the stock had not been able to take this level out to the upside, and just to actually on a daily chart highlight why we think of this level $210 per share level. We had a confluence of Fibonacci resistance coming here. So we had this CD leg here, and in that we had this 50% retracement coming in of this CD leg here, which is the one-to-one projection. I will talk more about that on the weekly chart. And we also had a 38.2% Fibonacci retracement coming from all the all-time highs reached back sometime in November of 2021 to the recent lows of about $105 per share level. So because of this, and also we had this symmetry, something we really like to take a look at when we do our analysis, that this BC leg had been of this much magnitude, and if we just clone that and we try to project it, this is what we have. So we had a similar magnitude move of the BC leg coming off the lows here. It was telling us, because of the confluence level of a number of things coming together, that this is a very key level to watch. And in fact, in the previous videos which you can watch on the channel, we had been writing Tesla $210 key level to watch. Now let me explain a little bit more what this yellow shaded region is. So this yellow shaded region is essentially a one-to-one ABCD pattern. So it's a one-to-one projection, which we like to call it ABCD. It could also be called 1, 2, 3, 4, doesn't really matter, but ABCD just sounds good. So essentially what it is if I just take a line and draw it like this, clone it, and we'll project this from the top here of this, and if we call it, let's do it together, I'm gonna call it SA, then we call this swing end as B, then a retracement of it, C, and then the projection of the AB swing from C to the point D. Here we go. So this is the ABCD. Now here I've not mentioned there was a retracement. It could most likely be the 78.6% Fibonacci retracement of this AB swing. So guys, that's how this pattern we identified that. Also, um, just below that, if we look at this swing, let me just mark it as X as just for reference. If you look at the swing XA and we take a retracement of it, then what we have is we have a 50% retracement coming around $160 per share level, and the important one is the 61.8% Fibonacci retracement coming roughly around $146 per share level. So 145 to 146 level is kind of what we were looking at. So that's why we had a potential for $155 to $145 per share level as a zone where the stock could find potentially good support. But we did mention it with a question mark because the patterns can fail. So far, what we had going on here in the Tesla stock is that for two consecutive daily closes, we have this ABCD pattern being held around $155 per share level. So that's pretty good. Now, if the price begins to close below $145 per share level, then on two consecutive daily basis, what we look at, then this pattern becomes more of a suspect. It's possible that we could have a deeper retracement, perhaps a retest of the lows of 105 at the beginning of the year. Guys, we're gonna move to the weekly chart now. So let's take a look at the weekly chart. So here the pattern is a little bit clear in terms of the support when it came around $105 per share level. That is a level which we had identified way in advance, and you can actually go back and watch those videos. In fact, I'll put a link in the description and also try to tag them at the end of the video. So here what we have is essentially going back to the lows of the 16th of March 2020, so COVID lows. This is our point X. I'm just going to mark it as X for reference here. So you take the swing XA, take a retracement. So the 78.6% retracement comes around 106. Then what we have is this swing AB. You take that and you essentially project it from the point C, and it comes around $105 per share level. So we had a confluence level of a Fibonacci retracement and a one-to-one projection coming together, telling us that it was a area where we could have pretty good support come in. And in fact, this is what we had written: 105 $105 per share level likely to be a good support level. And in fact, after a few months, it is still being held as pretty good support. Now guys, so here this is the level. If we just go back all the way back to the all-time highs, the 38.2% retracement is coming around around the $220 per share level. And this is something which we have to watch as a possible resistance to the upside. So here on the daily chart, we already discussed the ABCD pattern formation, and if this level of 155 is likely to be held, so what can we anticipate? So then, assuming that this low is held at $155 per share level, what was the exact low? Was $152.37. We could potentially have a ABCD formation to the upside being formed if this low is being held. So what we are assuming is that this is our reference point X. This is point A in the swing. B, this is A, B, C, D, which will in fact look at the 38.2% retracement being taken out. and the price moving to about 265 to $266 per share level. And I'm just going to leave it for now just at this possible projection, put a question mark beside it. So basically here there will be other retracement levels which could act as a resistance coming from this CD swing, going back to these highs, and then ultimately all-time highs from November of 2021. Now, guys, for now, what I'm just saying is that we have to watch for $210 per share level to be broken to the upside. We'll on the weekly chart, of course, we'll have to wait for the weekly closes, and only then we can say, okay, the what we're anticipating is this ABCD pattern to the upside might be in play, but we have to wait for the price action to tell us further. But what we are looking at is if $155 per share level remains as a support, then this ABCD pattern to the upside might be in play. Further price action will just confirm that. So now we're going to move to the really long-term chart, which is on a monthly time scale. So here we have these bar chart formation, and as explained on the weekly chart, this was the 78.6% Fibonacci retracement. I have actually gone and tried to on the monthly chart go a little bit beyond the 2020 low of March 2022 low, excuse me, 2020 low of March. So but the because the stock has been split, um, the the price is kind of squeezed from a chart kind of perspective. So it's fairly close. So I think just taking the March lows might in fact be okay to do that, because it's not making too much of a difference on a monthly longer term chart. So what is important is that we have this nice ABCD which we had a look at in the weekly chart. So here what we are looking at is, if you look at this kind of a bear flag formation taking place on the monthly chart, it's quite quite visible. And what we have had is one touchdown, two touchdown, and three touchdown. And of course the month had actually the month of April closed negative. Now whether it's gonna find support from here as discussed in the weekly chart and also a daily chart, then the month of May might uh, cause this to actually go and challenge the highs here, where we have this general resistance coming. And if the month actually close above that, and also the following month above that, then it is a pretty nice formation where the bear flag formation taken place and a breakout happened, and that will be very constructive for the stock. um, till that happens, at the end of next month, month of May, we'll do another analysis, a special report like this one, and we'll have our further targets, and we'll have further data available on a weekly chart basis as well, whether what we think might be happening is actually happening in terms of the support being held at $155 per share level, and the stock possibly moving in an upside formation, in an ABCD formation to the upside, one-to-one projection. That needs to be we need to wait and see that, awaiting further price action data. So guys, this is what we are looking at in the stock of Tesla in this special report. And if you guys like how we look at the markets, how we evaluate um, the market based on pattern recognition, Fibonacci retracements, expansions, and projections, you like this kind of analysis, which is in fact forward looking. We're not using any indicators here. We are using pure price action plus a forward looking indicator, which is Fibonacci and pattern recognition. Then please do subscribe to the channel. And also, if you found this video of educational value, then I highly recommend that please do click the like button. That way I know that people are finding my videos of educational value. It just encourages me to bring out more videos for educational purposes for you guys, and I just feel good about spending time producing these videos, which does take effort to bring out these videos, and that we do so consistently for a number of key stocks that we have been following, such as Tesla. Uh, Apologies, guys, the video got a little bit longer, but again, it's a special report being done for the Tesla stock. It is the end of the month, end of the week. So I think it was due that we actually kind of recapture all of the patterns recognition stuff that we do on a daily basis or weekly basis. But for our new subscribers, and also as a reminder for the old subscribers, um, I explain in more detail in the special report what these patterns are and how we are coming up with these patterns, and how the price action is actually behaving when these levels that we watch for in advance and we forecast, actually the market reach those levels, and what happens after that. So guys, thank you very much for watching the video. Please do subscribe to the channel. Wish you good luck and good trading, and have a great weekend.